A Santa Claus rally is when the stock market starts to melt up into the end of the year. Professional fund managers start to chase. They've underperformed. Why? Because their reputations are at stake, and now they got to buy the strongest assets to make their year-end reports look more attractive. But it's not just the stock market. The crypto market has the potential to deliver the biggest gains into the end of the year.
When we look at Bitcoin itself and you sort of do a measured objective technically, we can see a move as high as about $133,000.
Big money is chasing, and here's why it continues. All major central banks, the US, China, and Europe, are all on the path of lowering interest rates. Not only does this lower the cost of financing, encouraging economic growth, but it lowers the return on cash. And this is where we got to focus in. See, $6.6 trillion of cash is sitting inside of money market funds, earning interest. And as interest rates fall and fall, these cash accounts will earn less and less. And this incentivizes investors to move into equities, crypto, and other riskier assets. And if history tells us anything, bull markets strengthen when money market funds fall. So as the Fed cuts rates, economic momentum begins to rise. Don't fight the Fed. 70% of the US economy is driven by consumer spending. Black Friday, Thanksgiving, Christmas, New Year's, this is where the consumer tends to spend the most. Businesses increase hiring, boost their inventories, and in total raises the level of economic activity. Now, in my opinion, people are going to need a lot more caffeine while they go shopping for the latest brands. They might even buy more fast food while they stay at the Airbnb. Next, we have FINRA margin debt, which is the amount of leverage that investors borrow from their broker to buy assets. Those levels continue to rise, and this is a show of confidence as investors are leveraging their positions in anticipation of more gains into the end of the year. Now, keep in mind, as the Fed cuts rates, this leverage becomes cheaper, attracting more leverage. Now, of course, leverage is a two-edged sword. As it peaks and rolls over, that usually marks the sign of a top. But fortunately, we're not even close.
We're expecting some modest tax cuts, perhaps some deregulation.
Markets are also looking forward to corporate tax cuts and deregulation. Let's start with tax cuts. These have a direct impact on profitability. Companies pay less to the government, keep more of their earnings, and with that money they invest, innovate, expand their operations, and boost productivity. They can increase dividends and buy back shares to attract more shareholders to drive up the stock. Deregulation opens the door for new markets, new products, and new ideas.
President Trump has discussed a strategic Bitcoin reserve or strategic Bitcoin stockpile. The United States would acquire and hold Bitcoin for 20 years. This could help serve as a reserve that could be used to reduce the national debt significantly.
Deregulation also increases the competitiveness between asset classes.
The United States already holds over 200,000 Bitcoin in the asset forfeiture funds.
How much would you spend on Bitcoin as part of this reserve?
We have reserves, including gold certificates, that could be converted to Bitcoin. That way, we wouldn't have to use any new dollars.
The Santa Claus rally is a mix of consumer spending, lower rates, less regulation, tax cuts, earnings growth, and accelerated leverage.